Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. A couple of more aggressive growth stocks on the agenda for today with Bill Wilton, our aggressive growth stock analyst here at Zacks.com. And you are just never out of ideas in this category. iPCS, company name with the same ticker symbol, ironically, tops the list today. They're in the telecom space?
Yeah, they're actually an affiliate with Sprint PCS. What they do is they have exclusive rights through most of the Midwest to sell Sprint and Nextel products at those kiosks, standalone stores, things of that nature. So if you're buying one in the Midwest, it's probably from these guys.
Always thought those were independent, those kiosks. Never knew that they were part of a public company.
And they just reported their fourth quarter results on March 2nd. Things went well for them. On the surface, you say a company earned 0 cents a share. It's kind of a disappointment, but estimates were expecting a 27-cent loss, and they actually lost 24 cents in the same quarter last year. The reason I mention this is that it's a very key point for growth companies is when they get to that point from consistent losses to being in the black. Once that happens, it's usually an exponential rise from there. So things could go very well for this company in the near future.
How old is this company?
They've been around for a few years, but it's just at that point, when they finally get out of that, seeding stage is when you've got all the funding coming in, but you're still burning through cash, trying to get everything set up, trying to get the products in place, and your infrastructure set up.
Yeah, it would be interesting to know time-wise how long it took them before they turned that corner.
Yeah. Here you can see, the growth that I mentioned earlier from their loss to a sizable gain this year. And then they're supposed to be into above $1 for 2010. So they've got excellent growth going forward for the next couple of years. And here you can see that the market's starting to price that in. They've got a great trend line running here. It's pretty much doubled in price since the last couple weeks of January, and it's stayed consistently above that. So hopefully that's going to go ahead and continue for them.
All right, then there's Cooper Companies, COO, the ticker symbol. They're in the medical devices area.
Correct. They make diagnostic products and surgical instruments, especially for women's health. They also have a vision company that does toric lenses for anyone with astigmatism and even more complex, vision impairments. They specialize in that kind of contact lens to treat those people and help them see. I actually use the toric lenses myself, so I'm familiar with that. They just came out with their first quarter of fiscal 2009 on the 5th, and it was a 43% surprise. So they really just blew Wall Street estimates away. Things were much better than expected. They reported 57 cents, which is actually up about 50% from last year. So there's a lot of growth there, and it's coming at a fairly cheap price. You've got a PEG ratio just under 1, which is kind of the watermark. 1 is typically a fair price for the growth, and they're trading at about 9 times forward earnings.
Okay.
Here you can see again, I highlighted those valuations. They are a pretty cheap stock. They're a Zacks rank number 1, and they are a Zacks recommendation buy. Here you can see another trend line going up. This time they're starting to get hit by a little bit of resistance near there at 22. So
it doesn't look like it's grown by leaps and bounds here.
Not necessarily, but sometimes it's a slow growth. This company, their growth rates are about, I think it's about 1.5% this year, 12% next year. But the important thing is they have a lot of earnings momentum. There's essentially 2 types of growth companies. There's your typical year-over-year growth like we saw with iPCS, and then there's also earnings growth as far as how the estimates are growing. And this company's had some pretty rapid earnings estimate revisions.
Okay.
So that's why they were able to get onto the aggressive growth Zacks rank buy this week.
All right. And do you own either of these 2 stocks?
I do not.
If you want to check out more aggressive growth buys that Bill is writing about or has written about, we don't go forward, but we do look back. There's an archive on Zacks.com. If you take a look in the upper right-hand corner where we keep all of the Zacks rank buys listed by category, click on the headline next to aggressive growth, and that'll take you to his most current piece, and then an archive of the most recent 3, 4 that he's written about. With Bill Wilton, I'm Terry Ruffalo.